Hello guys, and welcome once again to my YouTube channel. So today's video is going to be on a trade breakdown I took on NZDJPY. First of all, I did my analysis on AUDJPY. So when I came to AUDJPY, as I always say, before you start your daily buyers, you have to look at the overall market structure and trade with the trend. The trend is always your friend. Remember that. I realized that the trend was a downtrend, which is a bearish trend. And then looking at the current price leg, I realized that price took external range liquidity, and when price takes external range liquidity, it will go for internal range liquidity. So if I am to trade this, I am trading against the trend, and if I'm trading against the trend, then I'm going to reduce my risk. If you are trading with the trend, you increase your risk. If you are trading against the trend, you reduce your risk. So after looking at AUDJPY, I went to NZDJPY because these two pairs are correlated. They kind of move together, and I use them to find SMT. I think I'm having some network problems. Okay, so I went to NZDJPY and I realized that the current price leg failed to take the external range liquidity, which means that price has formed SMT with AUDJPY, because on AUDJPY we took that external range liquidity, but on NZDJPY we didn't take that external range liquidity. So I realized that price had formed SMT, and also we've taken the previous daily low, right? So we've taken two liquidity here. One is the external range liquidity and one is the previous daily low. And when price took the previous daily low and closed inside, right, I was trying to trade this reversal candle, and I'm targeting this new day opening gap. And one rule for a reversal candle is that when the candle has a small wick, right, then it means that candle is going to be an expansion candle. It's going to reverse and expand. But in a situation where the candle has a large wick, then you should know that that reversal candle is not going to expand. And if the candle is that large, you should target -1 on the fib. If you don't get what I'm trying to say, you can go and watch my old videos. So looking at this, we took this previous daily low, and then the wick is not that large, which means that this candle is going to be an expansion candle. It's going to reverse and expand. So I went to the 4-hour time frame. After my daily buyers, I moved to the 4-hour time frame. And if that 4-hour time frame isn't clear, then I'm not going to trade that pair. That is one thing you have to take notes. So on the 4-hour time frame, I realized that price had formed a failure swing where the first candle took the second candle, the second candle took the first candle, and then closed inside, which shows that the third and fourth candle will distribute. And we also formed SMT, and SMT confirmed a reversal, right? So after this, I went to the H1 time frame, and on the H1 time frame, I realized that price had formed a swing point or a failure swing, right? And then price had printed this fair value gap over here. For me, the landing section starts from 1 a.m. to 5 a.m. for me. So if the 1 a.m. candle manipulates into a premium or discount array, then I will expect the 2 a.m., 3 a.m., 4 a.m. and so on to distribute. So here I saw that the 1 a.m. kind of manipulated, but I was a little bit confused So I went to the AUDJPY, which is its correlated pair, and I realized that we had a nice manipulation at 1 a.m. Price took the previous candle and then closed inside, which was trying to tell me that the 2 a.m. and then the following candle will distribute to my target, right? So since I have a clear manipulation on AUDJPY, I assume that I also have a clear manipulation on NZDJPY. So I went to the 5-minute time frame, and according to ICT, if we are bullish, we want price to go to manipulate below the midnight opening, and vice versa if we are bearish, right? So if you are bullish, we want price to manipulate below the midnight opening before it moves up, and if we are bearish, we want price to manipulate above it. But in this situation, Asia section did the manipulation itself, right? You could see the Asia section took liquidity, it's manipulated. So we weren't really expecting the landing section to come and take Asian's low. The landing section will only come to take Asian low if Asia accumulates, right? And then we will expect the landing to manipulate. So we could see here the landing section went a little below the midnight opening, and then price went up. In some situations, the landing section won't even come below the midnight opening. In a situation where the Asia section is extremely large, we do not expect the landing section to come below the midnight opening, but in most situations, the landing section will come below the midnight opening. So I confirmed my candle 2 reversal, and then I usually like to take confirmatory entries, which is waiting for another CISD to form. So I waited for another CISD to form over here. Let me delay this, and then I positioned myself, and then I entered, and I also targeted the -2 to -2.5. And how did I do that? I marked my manipulation leg, and then our target will be the -2 to -2.5, and the -4 to -4.5 is the maximum expansion. So after marking your FIB 2 like this, you make sure that these zones align with liquidity. If they don't align with liquidity, then why should you be targeting them? You don't have to target them. You always target them when they align with liquidity. The -2 to -2.5 is always the reversal zone, and then I could see that the -2 to -2.5 is aligned with a fair value gap, which made it a perfect target for me, right? And I could see that the -4 to -4.5 also aligns with this liquidity. And this would be my maximum expansion. I'll be trading during the New York section, and I'll target this or that. So that is the reason why I targeted the -2 to -2.5. You get it? So when your first candle comes close to your PD area, and then your second candle comes and then it takes your first candle and close inside, this is fractal, right? Price is fractal. What you have to look for is to find a CISD to confirm the second candle, and if a CISD is confirmed, then it shows that price is changing a direction, and the next candle will distribute, right? We can also say this is accumulation, manipulation, and then distribution. Now the reason why most of you usually do get wrong trade is because you do not apply premium and discount. You have to always apply premium and discounts when you're choosing your PD areas. So when you come to the H1 time frame, when this fair value gap was printed, we didn't really have any obvious swing points, so there is no need for us to mark our premium and discount in choosing this PD area. But in a situation where we have an obvious swing point, like for instance this swing high to this swing low. So let's say for instance we are bearish, right? If you are choosing PDRAs for our swing point to form in it, we will always apply our premium and discount. That is if you are choosing PDRAs, and then we will choose PDRAs that is in premium, because if you want to sell, we want to sell in premium, and if you want to buy, you want to buy in discount. So always apply premium and discount when choosing PDRAs. After performing your analysis on the daily time frame and you come to the 1 hour time frame, you have to apply premium and discounts in choosing your PDRAs. The only situation where you won't apply your premium and discount is when an obvious swing point hasn't formed yet, like this. For instance, we had this fair value gap, we had this swing low, but no swing high had been formed yet, so I just took it. You get it? But in a situation where we have an obvious swing high and swing low, we apply premium and discount. Also on your daily time frame, you apply premium and discount when you're choosing your PDRAs, okay? But sometimes price won't come fully into the premium, right? Because when we are in a extremely downtrend, we do not want price to retrace fully or largely into a premium. If it is happening that way, then it is trying to tell us that price is willing to change the direction. So let's say in this we are bearish, right? Let me demonstrate it this way. We are bearish, right? And price is moving down. We don't want large retracements. No, we want just a little retracement, and then price will continue, a little retracement, and the price will continue. Now if price is retracing, what is price retracing into? Price is retracing to tag a PD array. You get it? Price is retracing to tag a PD array. All these retracements, price is retracing to target PD array. So we can say that this is a retracement and price is retracing to target PD array. It can either tag this PD array and continue moving. Let's say in case we get an obvious swing point over here, we will mark it this way, right? And then price can come into the premium and then to move, but we don't want to have deep retracement, just a little retracement and then we move. So when price is retracing this way, it's tagging a PD array, and these PD arrays are going to help the price to reverse. Every reversal also do what? Every reversal in this market starts with a swing point formation. So we want to find our failure swing over here, right, in these PD arrays. And these failure swings, you can look for SMT or whatever you want, but we want them to happen in a PD array for us to trade the third candle, or you can trade the second candle, which I said if the candle has a small wick, then it means that candle is going to reverse and expand. So let's say in this situation, if price doesn't get here, then I can focus on trading the third candle. And for me to trade the third candle, what will I do? I will look for my CISD to confirm this candle to reverse, and then I'll trade the third candle. Yes. So if you have any question, you can ask in the comment section, and if you do not understand anything, go and watch my old videos. And if you have any suggestions, kindly let me know. Thank you for watching. Share the video, subscribe and like.